everyone, it's Tawnie Marcus with the Kevin Shoemaker team at eXp Realty, here with your April monthly market trend report. Now, it's still a very robust seller's market out there, very few listings to compete with. So if you've been on the fence, not sure if you want to sell yet or not, now might be the time to really explore your options. Give me a call, 970-370-8377, and we can talk it all through, along with do a valuation on your home, let you know where you're at with your equity position. As always, thanks for the referrals, and at this time, I'm going to kick it over to my partner, Kevin, who is going to give you the local and regional market report.
Welcome to this month's Market Trends Report, sharing with you the latest local, regional, and national trends affecting our home values. So jumping right into the numbers, you'll see that showings are actually up 49.5%, purchase applications up 39%, pending deals down 0.5%, and existing home sales up over 9%, putting new home sales up over 8% as well. But unfortunately, the home inventory is still down over 52% over last year, and new home inventory is actually down over 4%. You'll see here that interest rates are still increasing, averaging out somewhere around that 3.18 to 3.2 range nationally, even though many of us will still remember, just looking back only a short year ago when the rates bottomed out in that mid twos, but even 3 or 4% in today's market is still an amazing rate. Now, most analysts are expecting we're actually going to finish the year out somewhere around that 3.5 to 3.75 range come fourth quarter. Now, across the country, as we mentioned, the biggest issue still remains low inventory. Inventory is still down 52% compared to the year-over-year numbers. Here it shows our national numbers coast to coast, with areas in the darker red down as much as 60% in inventory. But on the bright side, experts are predicting that we're going to continue to see that inventory loosen and have more inventory hit towards the second half of the year, especially as builders continue to ramp up all of the new housing starts here in the spring. Now, here we show single-family units that were completed over the last 50 years new construction. In the last 15 years above average, the last 13 years well below average. The red shows the top 4 years, which we actually can all remember was when it led to the housing crisis, where we had the bubble of inventory. This graph definitely shows where the inventory deficit is and what caused where we are today. With low interest rates, the question is, are people doing a lot of cash out refinances? This slide here shows there's actually been a significant increase in those numbers since our recovery back in the mortgage crisis, but nowhere near the level of 2005 and 2006. Now, this surge is due to the surge in tappable equity, which is defined as the amount available for homeowners to access before hitting a maximum 80% combined loan-to-value ratio. Basically, what that means is if you have a $100,000 home, you can borrow up to $80,000 of equity and still remaining $20,000 equity. Now, comparing those numbers in 2006 to 2020, tappable equity is up significantly. But in 2006, the percent of cash out refis were 89% compared to 33% in 2020. The difference was much looser lending standards back then, for many borrowing up to 100% of their home's value. Definitely different times, but these are the key numbers that we're going to watch as we continue to go forward. Now, with low inventory comes bidding wars. The average numbers of offers was over 4 on recent solds. The lower the price, actually the more competitive it gets with more offers. So let's look at the side-by-side comparison of 2005 to 2020. Nationally, we're about 4% lower in appreciation on average from 2005, with the lack of supply really driving up that appreciation. Now, this graph shows the gap between product risk and borrower risk, with the yellow line being the reasonable lending standard that's been established. Okay? So you'll see here the significant drop in borrow risk and product risk in 2018, with the product risk really diminishing in about 2015 because the bad loan programs went away, and those that are actually getting loans today are really required to qualify at a much higher standard with a higher level of verification of documentation. In comparison, 2005 through 08, inventory and prices were going up, where in 2017 to present, prices are going up, but inventory is actually going down. So the market is actually driving the prices versus the lower lending standards in 2005 driving the market. With rising values comes an increased equity. The average annual gain is over $26,000, with some homes in the front range going up as much as $3,000 to even $4,000 per month, depending on what market you're in. The average amount of equity on a home with a mortgage is over $200,000, and over 38% of all homes nationally actually are mortgage-free with no debt. And this map here shows the average year-over-year equity change, with areas in the green representing the most gain, ranging anywhere from $32,000 here in Colorado to as much as $55,000 in areas like California. Now, for more than ever, it's been important to be prepared, both as a buyer and as a seller. See, it doesn't take a rocket scientist in today's market to sell a home in this market, but there's a very fine line between maximizing the value of your home and overpricing it. Because many a times, it's not actually who's going to pay you the most amount of money for your home, but actually who's the buyer that's going to be the most qualified and that's going to actually show up to closing with a check in hand. Now let's really just dive into the front range numbers here in the Colorado Front Range. In Larimer County, there are actually 237 homes currently on the market, 529 that actually sold in March. Those numbers are up by 45%. Days on market 64. Average sales price, $555,000, with 15 days inventory, down by 43%. Weld County, 314 homes currently on the market, 628 homes sold in March. That number's up by 30%. Average days on market, 59. Average sales price, $460,000, with 15 days inventory, down by 42%. Boulder County, 165 homes currently on the market, 301 that sold in March, number up by 37%. Average days on the market, 49. Average sales price, $1,037. 15 days inventory, down by 28%. Metro Denver, 659 homes currently on the market, 2,421 that sold in March. Number is up by 30%. Average days on the market, 14. Average sales price, $628,000. 6 days inventory, down by 50%. For the last 28 years, my team and I have implemented negotiation and marketing strategies that maximize our clients' equity position and get their dream. Even in multiple offer situations, we still can find a way to find and get that dream home. If we can help you give clarity on your equity position, or you'd like to discuss the market and if now's the right time for you to make a move, just simply give us a call at 720-230-3030 or go to kevinsellco.com. Either myself or one of my team members can help you and help you take the next steps to home ownership. And by the way, if you know anyone that's looking to start a career in real estate or possibly looking for a change from their current brokerage, we're hiring. We're actually growing and we're partnering with agents up and down the Colorado Front Range, and we'd love to have the opportunity to chat. So give me a shout, shoot me a call, shoot me a text, number 970-396-7248. Until then, we'll see you next month.